Leanne Jones now joining us from Bell Direct in Sydney for more on the market moves. Leanne, in terms of what we've seen on the market today, I was mentioning we were up by about 0.8% at one point. We've since pared back those gains to be almost flat. What does that say about the RBA meeting?
Ingrid, I certainly think it says that there is a bit of caution out there from investors. As you say, we started off very strongly this morning off the back of those very strong leads, particularly coming from Wall Street. Obviously, we saw a bounce in those oil prices, which drove up that energy sector. But from about 11 a.m. today, we certainly have seen that market losing a bit of momentum, and I do think that is reflecting cautiousness and nervousness from investors ahead of this RBA rate decision. We are still seeing that energy sector the best performer. It was up about 4% when I last looked. Obviously continuing to see those oil prices rebounding from the previous session. The material sector is also doing well. We saw iron ore up overnight, as well as aluminium and nickel, but of course gold was slightly lower, so we are seeing some of those gold stocks dragging, but nonetheless the energy and materials sector holding up very strongly. In terms of that economic data, we of course had that trade deficit coming through better than expected, and also building approvals better than expected, but unfortunately we didn't see too much movement in the market. We continued to see that fall, and I really think it's all about that RBA decision in about half an hour or so. If we do get a cut coming through, I do potentially think we might see some support in some of those financial stocks, those high yielding stocks, the telcos, so certainly will be one to very closely watch, and of course that rate decision.
Yeah, that could turn around the losses we're seeing in Commonwealth Bank and Westpac right now, with Commonwealth Bank down about 0.7%. Want to switch gears though, talk about Navitas just briefly. At one point down about 10%, but it's pared back a lot of those losses, now down about 3.6%. What did you make of the result?
Ingrid, if we have a look at that result, obviously investors are a bit disappointed, but some of those financial metrics looked okay. Of course, we saw their net profits down 13%, but if we do exclude some of those write-downs, they were up 12%, earnings were up 13%, and of course revenues up as well, about 14%. So we actually did see quite a solid performance across all of their divisions, but I think the outlook commentary in particular was a bit disappointing, and that's certainly why we have seen that share price fall today. They have reiterated their guidance, but they have actually seen a bit of a change in their commentary. So some of the growth in their student enrolments coming out of that university programs division, saying that they are only expecting that to moderate over the next year or so. And previously they actually said they were expecting that to increase, also expecting that earnings are going to be pretty challenging given the loss of some of those contracts from Macquarie University. We know that that contract was terminated last year. So I think investors have been a bit cautious about how some of those earnings are actually going to be replaced following the loss of that contract. So I certainly think the outlook is looking a little bit cautious, and that's why we are seeing that share price fall today. But as you say, we have pared back some of those earlier losses, still seeing it in negative territory, but overall we do actually remain a bit more optimistic on the stock despite seeing that share price fall today.
All right, Leanne, we will leave it there. We'll check in with you a bit later.
Great, thanks Ingrid.
Leanne Jones from Bell.